Today we're going to talk about the importance of having a checklist before you're trading. Stay tuned, we'll talk about that next. G'day traders, I'm Stacey Burke from Stacey Burke Trading, and today we're going to talk about a daily checklist that I use for the 1 hour, which is very similar to my end of day also, but really think it's important that you have a checklist to go through so that you can reorient yourself every day before you start your trading session in terms of focusing on the best practices and executing your system flawlessly and sticking to your highest percentage trade setups. So one of the things that I do each morning is I'll go through and I go back from start. I go bar by bar. As I've said before, I don't trade Asia, and I typically will only come in and look at the market at the Asia close, London open. But I'm looking for very specific things that we'll talk about in a second. So first thing I always look at is I usually go and I'll look at 1 ATR 20. So I'm looking at the average true range on the hourly charts for the last 20 bars. Now I got a great question today on one of my videos was, do you focus on a lot of different pairs, or do you try and just focus on one particular pair? Now for the Europe session, I usually look at 4 main pairs and six generally, but I really usually call 2 of them out unless it's a really simple textbook setup, and I don't get those all the time, but I look at 4 major pairs: pound yen, the Mexican peso, the pound Aussie, and the euro. Now the euro, and the pound New Zealand. The euro I sort of look at just as an aside. I tend to focus on those other pairs primarily because the average range of movement for them typically tends to be quite strong. So 150 or more pips, not every day, but often sometimes we'll get 200 pip moves. Now in the Mexican peso during the US session, it can move from 200 to 500 pips or greater sometimes. So one of the things that I need to know typically is I just want to know the average range, and I know for most of those pairs it's going to be around 35 pips, give or take your spread. And why I need to know that is that I want to sort of just see if volatility has been changing at all in the last 24 hours. That is normally going to be my maximum risk. So when I look for these setups, I'm looking for a 1 bar stop setup. Now typically, I talk about this as well. The markets are always trying to break out, and they will do one of 3 things. They'll break out, they'll retest and fill more orders and then continue on in that original line of break, or they'll break out, they'll retest and fail and go into a trading range, or they'll break out, retest, and slam back to the other side, which typically is known as a false break or a marginal new high or new low. Those are the 3 things that markets do. They go up, they go down, or they go sideways. So it's important, especially during the hourly session, that you start looking at, number 1, what phase is the market in? Has it been trending? Did it break out from the previous day? Did that breakout hold? Or is it in a trading range in relation to the previous day's highs and lows? So I mark off the highs and lows. If it's broken out from the last day's session, or if it's taken out a low or a high, now I'm potentially looking at one of those 3 setups. So the market is either going to retest and fill more orders and then resume, or it's going to retest and fail and go into a trading range, or it's going to retest, fail, and explode to the other side, which again we talk about being a false break or marginal new high or new low. So I want to know what phase is the market in. So I mark off the highs and lows. I look at the pre-market. So the pre-market to me is the first couple of hours of the 24-hour market. I use the New York closing charts. The reason why that's important to me is I want to know, have the market makers or the pre-market movement of the banks or anybody, has it shown any strong direction or bias in that pre-market? Typically that will only happen in a strong moving market. Then I look at the Asia opening range. So I want to know, once Asia opens, is there any evidence? Now remember, I'm coming in at Asia close, just before the Asia close, after 8 hours, and I'm looking back and I want to know, has there been any directional bias when the Asia market has opened for buying or selling. So for example, in the first couple of hours of the opening range, if we saw evidence of buying strength, so more buying than selling on the hourly chart, and as we headed into the Asia close, if that was still valid, meaning that those buyers would still be in a profitable or a break-even position, I want to know that were they controlling the market. So I'm looking for some sort of evidence based on my other information. Are the buyers in charge? Am I going to be trading with those buyers, or have the sellers been in charge and I'm going to be selling with those sellers? So once the Asia opening range is established, I look towards the Asia close. Now typically, again, I want to know, has there been evidence at the close of a continuation of that original move, or is there now evidence of a strong close where the market has made evidence of an institutional move? So typically we may see that going into the London Open. There's been a strong push into the close of Asia where institutions have taken strong positions. We'll see London continue that, but now we see evidence of where Asia has given us an area to sell or buy off of, and again limit our downside with a maximum of a 1 hour stop. As I go to the US Open, if I've been in a position at Asia close, London Open, again I use those 1 hour levels now to look for an asymmetrical range. So if I took a position, I'm looking for a range on those hourly charts of highs and lows based on the setups, which we'll talk in a second. Is there evidence there of a 3-to-1 risk-reward ratio? So if I took a position and I'm risking 30, 35 pips, and the market moves in my favor, and that hourly level that I can project a range expansion from, is that giving me evidence of 70 or 100 pips of movement, possibly before it will hit stop losses on those hourly highs and lows? So again, I'm looking for asymmetrical risk rewards with my trade setups. If we've seen that market move strongly and continue into the US Open, I may hold on to that position, but if I've saw evidence of two-sided trading and it's already filled my stop or whatever, I might be out of the market and be flat. I don't typically stay up too late to trade New York, but sometimes I will, if I see that the market has set up into a range through London, then I'll expect that the market is going to move in the US session based on the patterns that I'll look for, that I look for in my playbook. So I've got a little checklist that I go through. One thing that I don't have on there is my 20 EMA. So again, I don't use that to trade with, but I typically will look to stay on side of the EMA. I've talked about this in the other videos. You know, I want to know, are we looking at a breakout pullback going into the US session or into the London, Asia close, London Open? Are we seeing a double top? Typically, we might see that after a market's taken out the low or the high from the previous day and then into the Asia close, London Open, we may see a double top form and the market will move strongly after, when it's formed that range, and I'll look at a measured move of those ranges to trade from. EMA squeeze, I've talked about that in some of the other videos. Head and shoulders and reverse head and shoulders. Measured move range expansion. So if we've had the previous day, like I talk about using Monday as a range expansion day. So if we see a breakout move and we're retrading with that original breakout from Monday's range, I will look for Monday's range to reproduce again. And then a range-bound market. So typically, sometimes you may be buying the low of a range or looking to sell the high of a range. But again, I will be using Asia and London as evidence to give me that range to trade from. So build your own checklist. It's critical because, again, the more simple you can make things, and just, again, make everything process-oriented, get in the habit of best practices, go through your own checklist, keep it simple, make it methodical. That's reproducible every single day for me. I know that at certain times of days I can get back on the screen. I'm not following indicators or looking for certain candle type activity. I've got very specific things that I look for that are time relevant to the market opens and closes, and that's what works for me. So build your own checklist, keep it simple, stay disciplined, stay focused, focus on cutting losses and letting your profits run, and may the markets go with you. Hopefully you got some value out of today's video, traders. Have a great trading week. Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.